What if I told you that you could become a millionaire by taking down criminals? No, I'm not talking about some fictional superhero, neither a Batman nor a Robin Hood type. I'm talking about a real person. A person who some see as a hero and others see as a villain. A person whose story is going to completely change what you think is possible and maybe even change the way that you think about your own career. There is a man who is responsible for wiping out nearly $100 billion in different companies' market values in less than 10 years. A bad analogy would be the Wall Street Robin Hood. A slightly better one would be the corporate CoffeeZilla putting his money where his mouth is. But this man's name is Nathan Anderson. Since 2017, he's made a career out of bringing down corporate giants by uncovering fraud, corruption, and wrongdoing in their businesses, and managed to pocket himself millions of dollars in the process. Whether it's the owners of the companies he's targeted or the innocent investors that have put their hard-earned money into these companies, he's pissed a lot of people off by crashing valuations while still making himself and his backers a lot of money. A single report from this controversial figures company, Hindenburg Research, has the power to move markets in a way that very few people hold, and the alarm bells are right to start blaring once these guys start sniffing around. The nature of his work and the potential consequences that come as a result of it have opened up all kinds of questions about his place in the world. Is he really the activist investor working for the greater good that some people make him out to be, or is he just causing a lot of damage for huge numbers of people while working for his own self-interest? This isn't just your typical journalist calling out the bad guys, nor is he your typical investor. He's someone who found a unique way to combine the art of journalism and exposing corporate frauds while making money off the back of that to build his own empire. Most of us tend to invest in companies when we think they'll grow, but Hindenburg takes a slightly different approach, which allows them to profit when companies fail. What they do is called short selling. It can sound a bit vague and there are complexities to it, but to boil it down to its simplest terms in the shortest possible way, let's compare shares in a company to Pokemon cards that are bought and sold on the market. Imagine you've done your research and you think that one of the shiny Pikachu cards is gonna go down in price. So you go to your friend that owns that card that is now worth $100 and you borrow it from him, promising to give it back to him in a month. Instead of keeping it in your collection, you sell it off straight away for the $100 that it's now worth. You wait for the month to pass by and your hunch was right, and that Pikachu card is now worth $50. So you buy the card back for that price and return it to your friend. In the end, your friend has his card back, you keep the $50 difference for yourself, and boom, you've just profited from acting on your theory of the price going down. That's short selling. You make money when you're right and the price goes down. If you were wrong and the price goes up though, you could be in a tragic situation where you lose a lot of money having to buy back the shares when the price is higher. You might remember back in early 2021 how buying GameStop shares and holding them to the moon became a meme. That basically came about because people caught on to how hedge funds were putting a lot of money into shorting GameStop shares, so they banded together and invested in it, skyrocketing the price and losing the short sellers billions of dollars when they had to buy back shares at hugely inflated prices. The whole GameStop story is a prime example of how short selling can backfire hard if you were wrong about the direction that the share price is going in. The thing is, Nathan Anderson has found a genius way of doing things where he doesn't really leave it down to chance. Hindenburg Research doesn't just invest in shorting stocks that they think will go down in value. They publish reports on their website exposing fraud or major misconduct by companies. They make the positions they take clear to readers and publicly report the research backing why they're making the moves they make. This is what has gotten many people to refer to them as activist investors who work for the greater good. Naturally though, this approach of publicly tearing into a company and telling others you're shorting them doesn't win Nathan many friends on Wall Street. Those who are invested in the companies they short and see the value of their investment tank, never mind those who work at and depend on those organizations for their livelihoods, don't tend to be big fans either. What they do is essentially made up of a double-edged sword, where you could easily see the societal good that they bring in exposing frauds, but the consequences of one of their reports could bring terrible losses to a huge amount of people overnight. Nowadays, even if they're not world famous just yet, they've gained some infamy in taking on giants and establishing themselves a track record. But they first came into the spotlight with their breakout takedown in 2020. The Nikola Corporation is an American company that develops zero-emission heavy electric vehicles and technologies like trucks powered by hydrogen fuel cells and several other renewable energy solutions. Their flagship product was the Nikola One, a semi-truck powered by hydrogen fuel cells. When they first announced it in their now infamous teaser video, it was a massive hit, with thousands of pre-orders coming in worth more than $2.3 billion, and it's easy to see why. Hydrogen is a clean, promising energy source, but it's also highly flammable even at low temperatures, and no one had been able to make the technology to use it as fuel for a vehicle. It looked like someone had finally cracked the code as they released a video of their truck driving down a road, and if this really worked, it could be the start of a real revolution in the market. Nikola had been moving from strength to strength, with their share price peaking at almost $2,000 and stabilizing at around $1,000 in September 2020. But then, a big shakeup happened. That month, a detailed report was released by Nathan Anderson's Hindenburg Research, which described Nikola as a complex fraud built on a web of lies. They specifically accused the founder, Trevor Milton, of being behind countless fraudulent activities and false statements about Nikola's technology, attracting partners and investors off the back of a series of lies. That video of their truck being fully functional and driving down the road, for example, at first glance, it seems like there isn't much to it, but if you look closely, you'll realize that that road isn't flat at all. The company just placed their truck at the top of a hill and let gravity do its thing to take it downhill. You're not seeing a truck driving here, you're seeing one rolling down a slope. The lithium batteries in their trucks that they claimed to have built also sounded incredible, but it turned out that Nikola hadn't built them at all. They had been made by an external supplier. A few months after the scam had been exposed, Trevor Milton finally admitted to the fraud. He had misled investors, claiming that his company was being revolutionary, while he knew full well that his products didn't work at all. The Hindenburg report led to a series of investigations in the US, but before their verdicts had even come out, the damage had already been done. By the end of 2020, the company's share price had halved, and it's been on a downward trend since. When all was said and done, Trevor Milton was sentenced to 4 years in jail, fined $1 million, and Nikola had to pay $125 million to settle civil charges. Hindenburg's first major takedown had been successful, and with that, people started looking into the company and trying to find out more about the man who was in charge. Nathan Anderson is a bit of a mystery. He's done an excellent job of keeping his private life, well, private. But here's what we do know about this incredibly interesting figure. He's around 40 years old and comes from the US state of Connecticut, where he studied international business at the University of Connecticut and specialized in investment and portfolio management. He started off his career in companies that provide financial software for professionals before moving to become an investment analyst in wealth management for high net worth clients. But meeting one man would change the trajectory of his career forever. Harry Markopolos was a financial fraud investigator who played a leading role in exposing the infamous Bernie Madoff for running the largest Ponzi scheme in history. In 2016, the two men would work together on an investigation into a $1 billion Ponzi scheme, where Harry Markopolos spotted Nathan's talents and referred to him as a world-class digger. This was the turning point where Nathan decided to make the jump and dedicate his career to exposing fraud in the financial sector. And in the following year, in 2017, he went on to establish Hindenburg Research. The goal of the company is to unearth man-made disasters floating around the market, where the name of the company is a reference to a man-made catastrophe in its own right. The Hindenburg disaster was when a Zeppelin, which was a mode of transportation similar to airplanes back in the 1930s, caught fire and created an iconic tragic scene where 35 people lost their lives. Just as this was an avoidable, man-made disaster, Nathan Anderson's company's stated goal is to prevent financial fiascos by searching for them and exposing them to the public. They look for corruption or fraud in the corporate world and shed light on these before more innocent, unsuspecting people put more money into them, often being labeled as activist short sellers. Hindenburg Research reports tend to take 6 months or more to prepare while investigating a company. They're very diligent with their process despite having a small team, and publish comprehensive reports with multiple arguments to support their views, which they then distribute across various news outlets and social media to maximize their impact. They make their position public, and naturally, people who work at or own the target companies get on the defensive, often accusing Hindenburg of market manipulation so that they can get a quick profit off their work. Nathan has built himself a bit of a cult following on X, with many more people following Hindenburg Research's page. In the few videos that there are about him, it's clear to see that most people think his strategies are controversial. Some think he's only out to make a quick profit for himself by screwing people over, while others think he's out there doing God's work in exposing frauds. So it's gonna be interesting to see what you guys think of him. Their takedown of Nikola was pretty black and white, exposing a fraudulent company and only really impacting its owners and shareholders. What followed that has been a series of reports that have targeted bigger, more influential companies and individuals that have built up to their most infamous case yet. In 2020 alone, Hindenburg released nearly 20 reports on companies that seemed fraudulent. They didn't necessarily short all of these companies, but they did start making a name for themselves by being very diligent with their work and starting to attract crowds of people on social media. In 2022, Nathan Anderson found a new target that he could profit from in the form of Elon Musk. In May, just after Musk announced his plan to buy Twitter, Hindenburg took a short position on the company, betting that Musk would either renegotiate or back out of the deal, which would lead to a drop in Twitter's stock price. Sure enough, 4 days later, Musk attempted to withdraw from the deal, causing Twitter's stock price to fall, and Hindenburg profited. By July 2022, after Musk abandoned his $44 billion bid to buy Twitter, Twitter sued Musk. At that point, Hindenburg revealed that it had bought up a significant amount of Twitter stock, betting that the lawsuit posed a threat to Musk's plans and reputation, and gambling on the price to rise as he'd probably be forced to complete the acquisition. As you probably know, Musk did go on to close the deal for the original price, and Hindenburg managed to profit from both the rise and fall of Twitter's stock price during the takeover. Profiting from the Twitter deal was a big move for them at the time, which they clearly saw as more of an opportunity. But since then, they've continued to be aggressive in publishing reports. They decided to take on another of the richest men in the world, and the fallout from that not only brought the most international attention Hindenburg has ever had, but led to serious questions being asked about the potentially damaging effect that their work could have on millions of people. Some companies are called too big to fail, and there are several reasons for that. And in January 2023, Nathan Anderson took on a company headed by a man whose failure could be so big that it would threaten to destabilize a whole nation's economy. Hindenburg Research released a report on the Adani Group, a massive Indian infrastructure conglomerate that owns several ports, coal mines, power plants, and even media companies. Gautam Adani is no ordinary businessman. He's an Indian billionaire that is not only one of the richest men in the world, but is also considered a key figure at the forefront of India's economic growth. Before the Hindenburg report, he was regarded, at least officially, as the second wealthiest person in Asia. Over the last 30 years, he's grown to become one of the most prominent individuals symbolizing India's economic success on the global stage. Crucially, Adani is also closely linked to India's current Prime Minister, Modi, and in 2020, the Financial Times noted that since Modi came to power, Adani's fortune had already skyrocketed by 230%. There had been previous suspicions of favoritism from the government, but despite these concerns, Adani appeared untouchable. His status as a powerful businessman protected him, but more importantly, he had reached a level of prominence where a downfall of any of his companies would have serious consequences for India's entire economy. Hindenburg Research had been looking into his practices for 2 years, suspecting him of wrongdoing, which prompted them to launch an investigation and publish their findings. Their report claimed that the Adani Group had been involved in a scheme of stock manipulation and accounting fraud for decades. It accused them of using a network of shell companies, some located in tax havens, to artificially inflate their revenues and stock prices. The report also accused Adani himself, the group's founder, of using family members to commit various frauds, creating the appearance of a much more valuable empire than it really was. Hindenburg presumably used intermediaries in India to short companies across the Adani Group, betting on the company's stock prices falling after the report was released, and fall they did. Soon after the report came out, the market value of the Adani empire fell by over $70 billion, and his own net worth dropped over $15 billion in a single week. The Adani Group responded a few days later, denying the allegations, playing the nationalism card and calling the report nothing less than an attack on India itself. They released a 400-page document in rapid time in response, aiming to show that the accusations were merely tactics by short sellers trying to crash the price of a stock for profit, labeling Hindenburg's report as baseless, attacking them personally, and threatening legal action. How seriously they took the report highlights how it was seen as a major attack not just on the Adani Group, but for India itself. Over the years, they've taken on multiple massive loans to fund infrastructure projects. If banks and investors were to lose confidence in them because of the accusations and stop lending, the group could find themselves in a terrible situation, where there would be implications for the entire Indian economy. The Hindenburg report also implicitly challenged Indian authorities, urging them to start an investigation on the report's allegations if they wanted to maintain foreign investor confidence. They did open an investigation, but in early 2024, India's Supreme Court ruled that despite the severe implications of Hindenburg Research's allegations, the Adani Group was cleared of 22 of the 24 allegations and would not be subject to any further investigations. Adani regained his title as the second richest man in Asia, at least officially, and the peak of the storm seems to have passed at the time of recording, where some could argue that the PR they got and the way that they were able to spin it could even be seen as beneficial for the group domestically in the medium to long run. More than anything though, the fallout from the situation has opened up a whole can of worms about the impact of Hindenburg's work and their place in the world. When buying GameStop shares and holding them to the moon became a meme, it was because people had an affinity with the shop as a place they'd go to buy games when they were younger. Because their actions were going against huge hedge funds who had bet on GameStop's downfall, there was also a sense of activism being done. In that case, short sellers were the ones being impacted by the coordinated actions on the market. On the other end of the spectrum, Hindenburg are shorting companies that are fraudulent and publishing their reasoning, where other people also join in. On this end, it's not the hedge funds who are shorting the company that feel the brunt of the actions, but rather the company itself, and the innocent investors they have who believed in them. If you had been someone who clocked on to Nikola making what seemed to be revolutionary technology before the mainstream was aware, or you were heavily invested in the Adani Group in India as one of the most secure places where you could see your money grow in the country, you probably wouldn't have been best pleased when you read the reports and saw the value of your investment plummet in a matter of weeks. There's a couple of key points within that, but the first is that the stock market is ultimately gambling, and unless you have insider information, and even then, you can never be 100% sure of what will happen. The other is that in the long run, companies built on lies and fraud tend to be a house of cards waiting to collapse under the pressure of its own actions. Whether they get a Hindenburg report exposing them or things play out naturally, in the long run, the truth tends to come out regardless. When it comes to Nathan Anderson and Hindenburg Research specifically, the bigger question becomes whether they're really working in the public's best interest as the activist short sellers they're often portrayed as, or are they just chasing profit for their own gain? Are those two things always mutually exclusive, or could they be both? Since the Adani report, Nathan Anderson and Hindenburg Research are said to have made a lot of money, and that was the one that really boosted their reputation to another level. Both his personal and the company's Twitter accounts gained huge followings throughout the conflict, and their growing influence earned them the award for the best short seller activist for 2 consecutive years as they continue to march on. At the same time, the Adani report also shone light on a frightening prospect that you can only really see once it played out. If these reports and the short selling are done as activism to expose companies committing fraud and stop man-made disasters, what if these reports end up leading to a reaction that causes a whole other man-made disaster in and of itself? If they were to have taken down the Adani group for their deceptive practices, and the fallout from that impacted the whole Indian economy, where tens of millions of people lost their jobs and livelihoods as a result of the knock-on effect from that, was that really a positive work of activism? If they're profiting off the back of exposing companies as fraudulent, but unsuspecting people who had already invested are taking a big hit, is that purely a societal benefit? Personally, I think that the work they're doing is a net positive for society, and the companies that they're exposing to be fraudulent would collapse under the pressure of their own lies in the long run if left alone regardless. If they're able to speed up that process, stop other people from falling into the trap, and profit off the back of that, I see that as a good thing. I recognize that there's definitely nuance to it, but that's just me. I'm really curious to see what other people have to say about him and if there's going to be any kind of agreement there. Nathan Anderson is a guy who has gone under a lot of people's radars, but if he continues to do what he's doing with Hindenburg Research at a high level, I wouldn't be surprised if he started getting a lot more attention very soon. If you enjoyed this one, you'll definitely also enjoy this deep dive we've done on Elon Musk, exploring whether he's the superhero or supervillain that different people make him out to be.